Hey traders, this is Ron Haight. Hope you guys are doing great. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues. Should always be addressed with your financial advisor. We'll kick off here with the Dow. It was up 27 cents, did the best on the day. Take a look at the Qs. They were down a little bit, about 1/3%. But bottom line across the markets, bulls still have the edge. Now, two stocks we looked at in this weekend's video were Tenet Healthcare and Vodafone. Here's a daily chart of THC. Not bad for a one-day gain. 7%. Now, earnings, according to Thinkorswim, is coming in or around August 5th. 7% after one day, better than a sharp stick in the eye, as they say. I could take some profit off here if I wanted, and then maybe even consider closing the rest as that earnings report comes, because earnings reports are supposed to be crapshoots. As it stands now, this one is really bullish, nice volume coming in. If I tried to go to an 8-day EMA as a trailing stop, which is the blue line, it might give back too much of the gain right now because this thing is starting to go vertical. What I could consider doing is maybe moving to like a 5-day EMA or just use the previous candle's low, which would be today 2205. So that one's working out well, not bad for one day. Here is if I can spell VOD. This stock has a black candle. All that means is it still closed higher on the day, it was up over 1%, but it closed the lows of the day. So if I zoom in, we gapped up here, which was the open at 1870. We closed down at 1840, so 30 cents lower than we opened. That's a down close, but it's still higher than the previous day. So that's why it gets a dark black candle. This thing is still bullish. Am I worried about candles that are black in that sense coming off their highs? Nope. Bulls still have the edge here. Now, Beyond Meat is moving after hours. The stock did lose 12 bucks today. This stock's a little insane. Opened up around 50, now we're at 222. Shows you a little bit of the lunacy that's out there. If I pop open my little panel here, as I record this video about 5:39 p.m. Eastern, we can see it's trading around 192. Closed at 222. That's 22 plus another 8. That's 30 bucks on top of today's $12 drop. So if you take actually go back to Friday till right now, you're talking what, 30 bucks? Yeah, 30 plus dollars. Where this would be on the chart, 192, we just draw a line in here. You're looking right around there. So, oops. If I zoom in, that's more like 192. Really, that does nothing to the overall trend. It's not down that much at all right now. Where I would look to keep an eye on is the 20-day EMA. Last time we got near it was at the end of June, and it kept going higher. We got below it. Technically, that would take the bulls off the table. They would no longer have the edge, and would start giving the bears a bit of an edge. Just be careful on that one. Remember Overstock? I talked to you guys about this one. At the end of June, we got above the 50-day. Really nice move. Consolidated, pops higher. Consolidated, pops higher. Consolidated. You guessed it, it's popping higher, and we're now challenging those previous highs from February and March. Volume here, the black bars are up days, red bars are down days. Bulls are totally winning in terms of volume. Nice big move. If you think about this from when I mentioned it, it was around 13. A month later, we're now sitting at 22. Now that's a really, really good gain. And notice what happened on July 22nd. We got right down near that red line, the 20-day EMA, and we stayed above it. While nothing works all the time, that 20-day EMA in red is often a great litmus test to see who's winning the battle. Where's the momentum? Is the momentum with the bulls, or is it with the bears? And the bulls clearly got it. Right now, if we get above 22, geez, that's so good, 22, let's say 23 bucks. We get above 23, then you start coming up here towards 27.50-ish, then the big one's all the way up here where that massive reversal happened. All right, so Overstock's still looking good. Abercrombie, remember this one? Stock had a 50% haircut from May to June. I want to watch it as it gets over the 50-day. Well, guess what? That finally happened. I talked about it over here when we got our head above the 20-day EMA. The target would be the 50-day, the gap fill. Well, now the stock's taken quite a while to get higher. The 50 days come down, and now we just popped above it. The only fly in the ointment here is the lack of volume. Wasn't much volume at all today. If that would have been bigger volume, above average volume, I would really start getting excited about this stock. As of now, I would consider a 20-day EMA in red as a trailing stop, end of day basis. Target, gap fill 20, well, where the gap came down, sorry, is 20. The 200 days about 21, then the gap fill up there at 24. And one stock I'm keeping an eye on is Activision. I'm going to be curious to see what that earnings report is going to come in at. Right now it's saying in a couple days, according to profit charts, we're right at the 200-day. If this stock can start getting above the low 50s, 51, 52, the gap fill up to 62.50, which could be as much as 10, 20%, would be interesting to keep an eye on for that one. Plus, it's also getting close to entering a seasonally bullish period. So we'll see how that plays out as well. That's it, folks. Wish you guys all the best. Nice short video, and I'll be back with you tomorrow. Take good care.